Bitcoin has never experienced a US dollar collapse, a real collapse, a collapse of over 30%. And this has happened only 3 times in the US dollar's 50-year history. And it looks like we're on the verge for a 4th time. We called the top back in 2022 in September quite easily. And again, the lows in March of this year. Let's take a look in today's video at how this collapse, this first time for Bitcoin and for crypto, how this is going to affect Bitcoin and potentially set it up for yet another big bull market. Every video is jam-packed full of data, so hit the like and subscribe as soon as you jump on. This is your home of macro cycle analysis, where we study the past to forecast the future across Bitcoin, cryptos, real estate, and the stock markets. Links in the top of the video description for our free trading guides and investor reports, so check those out as well. On to BTC and the US dollar collapse, as I mentioned in the intro. This looks like we're on the verge of a 4th breakdown. Now, we've been looking at the US dollar for quite some time. We almost called it to the day, the top here in September of 2022. It's not a very hard thing to do, especially when you don't follow what the masses are doing at the time. At that time, everyone was talking about the US dollar. Everyone was talking about how the rest of the world was going to collapse and the US dollar was going to take everything, all of the gains. Everyone was buying US dollars. But of course, that was at the wrong time. The same thing happened again. You guys that have followed it on the channel saw it play out through March and April of 2023. We called this low because we saw how extreme the news got. And the news was essentially everyone is leaving the US dollar. You've got Malaysia, China, Brazil, Russia, South Africa creating different currencies to remove their reliance on the US dollar. And that was cause for a temporary low in this market. It's almost as simple as that sometimes, especially when you remove the emotion from the market. Now, it looks like we're on the verge of a continued breakdown. Okay, so sometimes these news announcements only call temporary bottoms, but nonetheless, this has been a bottom that's stuck around for now 3 to 4 months. So quite significant. And no doubt when we eventually break down from these lows at 100.8, we'll start to see some of that news come back into the markets as well. Now, in this video, I want to share with you why this is so important, what I'm looking at when it comes to the US dollar, and what this could mean to the bull market, as we can pinpoint almost to the day when you start to see the exuberance flow back into BTC based on what we're seeing with the US dollar. Now, of course, there's heaps of stuff going on with the economy. There's still bears out there. There is still a lot of information and data that has to come out, and everyone is waiting on the next piece of information, just like they'll be waiting on the next federal funds rate meeting. We're currently at 5.25% interest rates, and the next one is expected to increase again to 5.5. So I'm really just talking about these because this is sort of the logical mind, which is fair enough. There is a lot of logic in this that should make sense as to why the US dollar, in this case, might not collapse, saying that, things should remain relatively stable. And then there's also the other logical side as to why it should collapse as well. So it's a hard thing to decide, which is why we always go straight back to the chart to give us the answer. So some of the things coming up, of course, are the interest rates in the next couple of weeks. July 27th here, interest rates probably going to rise another 0.25%. The next announcements coming up more immediately are in the next day or so with the inflation. So we got the CPI announcements, and inflation has been coming down pretty steadily over the last 12 months. And it looks like the next forecast is for 3.1%. This is for CPI year on year. And the last reading was at 4%. So inflation is basically dead. It's come all the way back now, and we're nearly back to the levels that we saw prior to the pandemic. So you're at 2.6, 2.7, thereabouts, 2.9, and we're at 4. So it looks like we might get it back to 3.1. I know this sounds crazy. I know there's going to be a lot of armchair macro analysts, maybe in the comment section, saying it's not possible. We're going to see inflation rise again. Maybe we do. The point is, follow the chart, because the chart is telling you something different. It doesn't matter what all of these fundamental announcements mean in the long term. follow the chart. That's the main thing here, because there's always going to be some other news. There's CPI, then there's core CPI, then you've got the interest rates, then you've got retail sales, then you've got unemployment numbers, then you've got some other reading. This is what I've been doing for over 15 years. It's pretty much the same thing day in, day out. Now, to not make it so boring, let's have a look at the US dollar. This is extremely interesting as I start to throw a few of the lines back onto the chart. What we've been covering is a bounce in the US dollar from some of these lows here. So March into April, that was the extreme news. I think I've got the top news here. This was back in September when the top came in. You know, it soars to 2-decade highs, which of course brings in all of the media. But the same thing happens in reverse when we get down to those lows. As I said, lots of countries trying to create their own currency and remove their reliance on the US dollar. Maybe that's going to be the case, maybe not. Who knows? End of the day, we just follow the chart because the news tells us many different things. All right, so looking back at the chart, we did fail at the 50%. You can see that here. Underneath, it's failed. And again, at the rejection point, the US dollar basically was a lot weaker than I had expected. I thought we would at least come up to test the top here at 105.9, but we basically only topped out at 104.7. So that was the low and a move to the upside. And then we got the failed move to the downside. So now we can get rid of these and any of these other resistance lines up above. It looks like 50% is going to fail here at 107.8, so we won't even make it that high up. And the next line of support is at 100.8. So let's watch out to what happens to Bitcoin when the US dollar starts to break down further, because you can see the trend is well and truly on the decline here. If we throw on our Gann swing indicator, you can see we've got lower highs, lower lows, slightly higher low, but now we've just formed a lower low as well. So the trend is well and truly down here on the midterm weekly chart, and it looks like we'll continue to break down. Should we continue to break down, the next major levels are around 97 and then at around 94.6, and they stretch back quite a long way. Look at the years down here. These moves take a long time to play out. Don't expect it to happen in days or weeks. These things typically take months to happen. If it happens quicker, great. But if it doesn't, it will typically take months, and it starts to lose a lot of people's interest, and then they just sort of forget about it. As you can see, we have the first low in January, the next low in April, and come through to July, and we still haven't broken down from 100.8, but it looks like we will eventually get there, maybe in 2023. So they're the next levels of support. Now, this is a really interesting period from the last bull market cycle for BTC. You can see the COVID low was basically the peak of the US dollar. The US dollar started to collapse, and then right around the breakdown of this key level, that support there around 94.6, you can see it was some previous tops. It was some support here, support again, and then it was rejected down, rejected again, support. So it's a pretty strong level there, 94.6. Basically, when that started to break down, that was a key time for BTC back in July when it started to break out of this basically bull flag here, this pennant flag. You can see it just starting to break and then go into a quick move to the upside, started to consolidate, higher low formed, and then we went on to that mega bull run that happened through late 2020 and 2021. So that move there is the key move that broke it out of the triple top, the bear flag, the bull flag that's happening here, and started it on its way to that next move. For the US dollar, it basically remained at these lows for the entire Bitcoin bull market, and it's almost to the exact day as well, which is pretty crazy. So you got July 2020 all the way through to November 2021, which most of us should remember is the top of the market. So about, I think it was the 10th of November for the exact top, and we look at the exact top here. There is the week of the market breaks out of this zone, so the US dollar gaining strength to the day when Bitcoin topped, and then the US dollar goes on its mega bull run. Everyone's focused on the US dollar. This is the bear market for BTC, and rinse and repeat. Same thing happens time and time again. So we've got the breakout right there. US dollar gains strength, Bitcoin collapses. Now we can almost do the exact same thing in reverse again when we look at the collapse of FTX. So we had the lows forming here for October and September and June, and then this quick little move down for the FTX collapse, which most of us should remember is an absolutely massive event. That collapse happened right here on this bar, and that was the breakdown from the high. So I'm on a weekly chart here. You can see the swing bottoms. The market decides to break down at that exact time when FTX collapses to that final low. So you get the breakdown, and then Bitcoin goes on an accumulation while the US dollar is collapsing. So the US dollar coming down, down, down. And that's basically the bottom of Bitcoin. We've got the bottom happening, and now Bitcoin rising, US dollar collapsing, distributing, meaning it looks like a lot is getting sold off because you're getting lower tops and eventually more and more lower bottoms, which means we're probably going to see further downside. When that happens, guess what happened last time? You had the breakdown, and this starts to form that zone for a new Bitcoin bull market. So then, even if the US dollar is going up and down in this zone, we're still going through an overall Bitcoin bull market, which that happened last time. The market went up at that period. So that's what I'm looking out for this time around as well. Probably when we start to get a bit of a breakdown, maybe this level, maybe the next level's down here, maybe we go back to that same level. That's going to be the key breakdown point over the coming months, which then lines up with a new Bitcoin, I would say a retail bull market, because we know the bull market starts from the low. We don't call a bull market starting from the breakout of the all-time high. The bull market starts from the low. Retail usually joins after it breaks the high or a key significant price point, maybe in this case 48,000. But so for the US dollar, maybe we get it when we break down some of these key levels to the downside. Now, like I said in the intro, there's been 3 times in history where the US dollar has collapsed 30-odd%. I'm going to take these lines off so that we can see it a little clearer. But there's 3 times in history where it's broken down from that point. And this typically happens at the end of the real estate and economic cycle. So if you've been following the channel, you know what to do. Hit the like and subscribe. If you find value from it, do hit that like up. It's nice to see you guys still following through during this period of the market when the masses aren't here and showing your support as well. Make a quick mention for anyone in Bali. I'm doing a meetup this Saturday with Heidi and Toby from Crypto Tips on YouTube as well. Great guys. So follow me on Twitter. Go and check out that post and shoot me an email so I can give you the details for this weekend. Hopefully see you there. Now, going back to the US dollar, let's get rid of this here so we got some more room. You can see the moves. This one here, this was at the end of the 18.6 year. So roughly speaking, that 18 to 20 year cycle of the real estate and economic cycle, which governs everything. It all plays in together. This has been happening for over 200 years. This is the cycle. I don't make it, I just follow it. So we're looking at the collapse here for that period there, going into the late 80s. We have that collapse, if you remember, from the stock markets. Then we had another collapse. We had a build up into the bull market, I should say, before the collapse in the late 80s. So that 1987 collapse and the 2008 collapse, which basically started from the peak in 2007 and culminated in March of 2009. So that's those areas here. You can see the bottoms. You can see the market dropping here. So the US dollar collapsing while we're going into that last stage of the stock market peaks. And it collapses pretty damn heavily. This time was about 50-odd%. We go all the way down to that 1987 area, so there's 48%. And then the 2002 down to about 2007, I think it was October. So you've got another 35%. And then our previous collapse here was through the 60s and 70s. There was quite a few times where the stock market corrected during that period. So we'll have a look at these two. If we were to drop now around that, let's say 35%, and then go down to the 48%, because they're the 2 last cycles, 35% takes us back to these lows at around 74. So that is all the way back to these levels here. 35% drop from the top, which is roughly speaking around the bottom of the S&P 500. Okay, so stick with us here. It's understanding the cycles upon cycles, which, like I've said, this is what we do full time, study the past to forecast the future. These cycles are basically looking like they're coming together yet again for the end of the 18.6-year real estate and economic cycle, which basically leads to a pretty significant drop in the US dollar in this last stage, and then the US dollar consolidates and goes on its first leg move there. So it looks like, doesn't mean everything has to happen exactly the same, but it looks like we're starting to get that move on. Now, maybe we hit the 35% mark, maybe we go further. The reason I bring up both of those is that we have been seeing lower highs and lower lows over the course of 50 years. And if we look at 48%, like what happened in the 80s, that would take us further than 60 on this scale here. So this would be the lowest point. The US dollar would reach a new all-time low, which some might say is very probable, right? Even if we were to get back to that 35%, back to these previous lows, that could spark a pretty decent bull run for BTC. Based on what we've had a look at before, once the US dollar does go on its leg down and start to trade around the bottom, Bitcoin has gone on a pretty significant bull run in the past. Nothing has to happen exactly the same, so just pointing that out. But that is interesting that a lot of these major events that look like they are starting to happen based on the charts, as I've said, not based on what the next economic data is coming out next week, which, you know from my voice, I think is absolute nonsense to a degree, because many put too much emphasis on this. It's important to know what's coming up, but we don't need to put the emphasis on this. The emphasis is on the charts, because this tells us what the funds are doing, what the money markets are doing, what the players are doing, what the smart money is doing, because the data is all in the charts. The charts don't lie. So that's what we're looking at here, and we're just reading what the story is, what potentially is going to be the news in the coming months to years. So let me know in the comment section what your thoughts are about this. The thing that I'm seeing here is that we're coming into another downside, mega downside for the US dollar, a collapsing US dollar. Bitcoin has never seen this before, because basically Bitcoin was first invented 2008, 2009, and that was its genesis block there. So back at this zone for the US dollar, and it's only ever really seen a rising US dollar over the long term. So if we do start to see this big breakdown, which Bitcoin has never seen in its history, this could lead to part of another big narrative for Bitcoin to increase in price, even if there is no liquidity based on money supply or any other reason that comes out like that. As a side note, I have made a video about the money supply and the liquidity going down while the markets can continue to go up, like we've seen with the stock markets as well. That's going back here 2 weeks if you want to check that out. So basically that's what I'm seeing. The massive thing here, probable significant collapse on the US dollar. I don't think the US dollar is going anywhere. This is still going to be the world's reserve currency. It's not going to be taken over by some magical internet money. It's not going to be taken over by communist countries that have closed trade and only choose to trade with who they want to trade. It's not going to be taken over by that. It's going to be a long time before the US dollar is taken over. Eventually it is, but it's not going to be taken over by a Chinese yuan, which is very heavily controlled by their government. So that's all I'm seeing in the markets. Let me know in the comments down below your thoughts going on here. This is weighing more into the bullish camp, the macro bullish camp for a Bitcoin bull market, and yet another narrative that you can chuck into the bag with the Bitcoin ETFs, with the Bitcoin ordinals, with whatever you want to throw in the bag there. Like and subscribe. I've got plenty more coming up for you. I didn't even get through to the S&P 500 and other discussions about what's coming up in the second half of 2023. Massive returns here. Thanks again, guys. I'll see you at the next one, or maybe I'll see you on the weekend in Uluwatu in Bali. Till then, peace out.